Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, hope you're having a good long weekend. So the Canadian MJ space is really dull. It's boring at this point in time. We had the bulls show up back in June and July, and not really much has happened in the last month. And if you are in your long position, there's nothing telling you to sell. And if you are in the sidelines in cash waiting, there's nothing telling you to buy in right now. So that's why we are sitting stagnant and looking for the US MJ sector to heat up in the fall as it always does, and watching to see if the correlation with the Canadian space is there as well. So checking in on WEED, we can see really the whole month, not a whole lot has changed. We started the month, first day of August. Let's see, we closed the price at 902, and here we are at 893. So pretty stagnant month. Where we stand right now, just in the past few trading days, I'm looking at support down at 877 with multiple lows, and resistance is up at 9, 905, 904. So essentially the first range to be watching is the low $9 range and the 877 support. If we break 877, 866, and 836. Goal for the bulls is to break 921 and be looking up at 953, the highest price we've seen on this big bull move. So that's the wider range we're looking at, the high of the move and the low of consolidation after that high. So 953 and 836. If you are a longer term trader, those are the more key levels. If you're a shorter term trader, you're looking at the first levels that I said. So on the weekly time frame, we still have that higher low and higher high from this bounce initiating back in June, and we are looking to form a higher low here at 836, and resistance is going to be up at 953 for the bulls to break that level. You can see the Bollinger Bands are reflecting the tightening range and getting tight themselves. We did see a bullish MACD, not really a whole lot of momentum going with that, and we can see in July we had our nice increasing bull volume, pretty low, inconsistent, or it's very consistent volume, but really nothing to be looking at in terms of direction where we're trading sideways. So not much to report on, in all honesty. There are some names that have seen more movement than others. APH trading sideways this whole week. I'm looking at support of 590. Resistance is 606 and 615. The wider range is the high that we've seen of 680 and the low of consolidation of 562. Bollinger Bands very tight, showing that tight trading range. So on the weekly time frame, we have our higher low at that 562 level. And the bulls want to try and see a higher high and see this bullish MACD cross follow through. It hasn't happened yet. We are going to have to get back into the low $6 range to see the weekly bullish MACD cross follow through and try and head back towards 680. Weekly time frame, or actually this is the daily for ACB. So we did get a pop for the bulls on ACB with their earnings reaction, and it's an inside bar on Friday, double top at 253. Then we're looking at 256, 274, 282. So again, sideways trading. 282 key resistance. Support is down at 235, the low of that consolidation. We did break from a very tight range to favor the bulls, but the Bollinger Band was right there from already being tight, trading sideways, and we didn't really have much more room to move upside from there. The bullish MACD cross is about to follow through, so slight bullish momentum, but not that significant. Weekly time frame, bulls need that higher high to change this trend. We haven't seen a higher low and a higher high on the weekly time frame since back in about April when we reached our top here, and we now need our higher low, which is forming at 238 and 236, and we have to see the bulls break 282 to get that higher high. EMC, bearish reaction to earnings. Everybody thought we're going to see new all-time lows. One thing that people don't anticipate is how good the market is at pricing things in. The market is really good at pricing in news events and pricing in earnings. Of course, we get surprises, and that's when we see big moves, but generally the market knows what's up. And so here we had the bearish pullback before earnings, and we're right back to the level. This is the market really anticipating earnings, and this pullback on EMC was much more significant than most names we were looking at, and in my opinion, that's because people knew that earnings were coming, and they did not want to hold for earnings. So that selling pressure was the market pricing in bearish earnings. So support was down at 162. We did hit 161. But we're building a base at that level. Resistance is 171, the high of this bounce. So where we break next week, We're either going to see a bear break of 161 and look at this gap of 154 and the all-time low of 150, or we're going to see a bull break of 171 and be looking at the upside gap at 175. The bears certainly have momentum. There's no doubt about that. This weekly time frame is fading back towards that all-time low. We are still on the verge of a bullish MACD cross, but unless we can see a break of really 190, the bears do still have control on this weekly time frame. FIRE, nice bull break to end the week as well, and then consolidation with an inside bar on Friday. Resistance is up at 122. Bulls are still trying to cling their way back to the sell the news reaction. So after 122, we're looking up at 126 and 132. And our support is 117 and 115 from where we currently stand. Weekly time frame for FIRE, we do have our higher low established now. Now we need that higher high by breaking 132 to put the bulls back in the driver's seat on the weekly time frame. MJN, sideways trading. Support is down at 226. Resistance is up at 247. Probably the most bullish name on this list in terms of the August action that we have seen after that big time recovery. And you can see very healthy consolidation. It was definitely prolonged in the amount of time it took, but it led to the bulls showing up and seeing continuation. And the weekly time frame with that higher low and higher high playing catch up to a similar pattern that we're seeing on some of those bigger names. So MJN is one of the better looking charts for the small cap bulls, and that again the fact that we are so similar in chart to the other names, ACB and or even just APH and WEED, definitely favors the bulls because those are more bullish charts longer term, where we have names like FIRE that have a lot of work to do due to that sell the news reaction when they got their license. HMMJ is telling us that this space is stagnant. The MJ sector is not seeing much action. 837, 836, and resistance is up at 865, followed by 872. Weekly time frame, not much going on. Bulls trying to form a higher low, trying to turn things around. Really, we're going to have to get back over 966 to really change this trend back in favor of the bulls. That's a very long way away at this point, over 10%. So that's going to take a lot of bullish action to see that play out. So traders are nowhere to be found in this sector because you don't have volume and volatility. So I am nowhere near trading this space. There's way better opportunities out there in the cryptocurrency world as well as other sectors. As far as holding long positions, like I said, no reason to sell. We're not seeing any fear. We're just patiently waiting. We're waiting for 2018. We're waiting for some hype and some news stories to come back. And we're waiting for volume. We have to see volume to have action and volatility. So just patiently waiting. Again, boring sector, people falling asleep here. This is the ideal time to educate yourselves with technical analysis and be prepared when the volume and volatility does stick or does come back, and we can be learning in the process and be more prepared and be more prepared for other sectors and be able to move around. And that's that. I hope you have a good rest of your weekend, and we'll see you soon, hopefully with a little bit more action to report.